Brait was previously a listed private equity fund manager, but restructured itself in 2011 as an investment holding group after a sizable equity raising underwritten by management and by investor Visa. It now owns 52% of Pepkor and 10% of Premier Foods. It also has a number of smaller holdings and managed funds. Brait has a market cap of 18.5 billion rand, a price to earnings ratio of 8 and a dividend yield of 0.8%. Brait, Paul, there's a bit of a change in the business model.
Massive change, but look at that share price. It's one of the most successful counters on our JSE this year. And the reason is that the reorganization took everybody a while to work out what it all meant. Because prior to that, it had been a listed sort of private equity group. But they basically raised a whole lot of capital and then bought out the stakes that the private equity group had in these underlying businesses. Visa, one of South Africa's most successful investors, is strongly involved here because he owns lots of Shoprite, but also lots of Pepkor, and then lots of Brait, which owns the rest of Pepkor. But the reason it's done so well is when it first popped onto the market, it was relatively inexpensive, and people then started doing the numbers. They said, Pepkor is very similar to Mr. Price. It's all that plastic furniture and plastic clothes. And then it's the food business, Premier, which is very similar to AVI and to Pioneer and so on. So by doing the valuation comparisons and the earnings and working out the shareholdings, you could work out that this thing was worth more than it was figured to be worth before. So it's done particularly well. Since listing, they've done one deal, which is to buy a 20% roughly stake in a food business in the UK called Iceland Foods, which is like a frozen food business. So all of this put together is quite good. And the management team, John Nodder, who was the ex-executive director at Brait, he's a good-looking guy that everybody likes, and they've raised money and everybody's happy.
So what do you make of the Brait business model? Pepkor is their gem right now.
Yeah, I think, look, the underlying businesses are solid. What we're not thrilled with is the fact that the model has changed from paying out dividends based on your NAV and how much the private equity has generated in terms of return on equity's underlying investment. It's now based on free cash flow. And the reality is, if this business is geared and they've got lots of investments, they'd rather use the cash to pay down, obviously, their debt and to potentially make more acquisitions. So it's a great deal for the owners, for the management of the business, a very good deal for Christo and for the rest of the Brait management. But it's not such a good deal for shareholders. And truth be told, I think the underlying fact that Mr. Price has done so well and Pepkor plays in very much a similar space, I think that's kind of been one of the strong drivers of the share price. It's also not the most liquid share, so it kind of does tend to get pushed. But at this point in time, we don't think that it's a great, from a shareholder point of view, it's not a great business model for us.
So you're not hot for
Not hot, no.
Paul, hot or not?
Look, I was hotter on it when it was at 12 Rand a share than I am when it was at 36. But look, I do like the team. I'm not a big fan of the way that they geared up and geared themselves and got a loan from the company in order to buy shares in the listing. But even they have now made a lot of money from that, so that's less of a stress point. I do like the underlying businesses, so I'm happy to call it hot. Although, as I say, I think the valuation is getting a little bit frothy.